Intel is back in the spotlight as Wall Street weighs whether its latest technology push can truly power a turnaround in both PCs and its struggling Foundry business, putting intense focus on what comes next for the company's share price. After closing at $40.04 on Tuesday, up 1.7% for the day and hovering not far below its recent 52-week high, Intel stock is trading steadily before the bell as investors digest a high-profile CES showcase centered on the firm's new 18A manufacturing process and its next-generation Panther Lake laptop platform. On stage at CES in Las Vegas, Intel presented 18A not just as another step on a roadmap, but as a once-in-a-decade inflection point designed to restore its reputation as a cutting-edge chip maker by delivering denser transistors, better power efficiency, and a node that can compete directly with the most advanced offerings from Taiwan and South Korea. The first big test of that promise will come through Panther Lake, Intel's upcoming family of laptop processors built on 18A and paired with a separate graphics chiplet, which together are advertised as offering around 60% better performance than the current Lunar Lake Series 2 generation, while also improving battery life for thin and light notebooks. Alongside Panther Lake, the company is rolling out its Core Ultra Series 3 lineup, expected to power more than 200 PC designs from major brands worldwide, with pre-orders that began on January 6th and general availability scheduled for January 27th, turning CES buzz into a near-term product cycle that could lift both revenue and visibility with consumers. For the stock market, this product wave is closely tied to Intel's broader ambition to reinvent itself as a global foundry powerhouse that manufactures chips not only for its own CPUs and GPUs, but also for external customers who today rely on competitors like TSMC, making the success of 18A a key signal for long-term margins and growth. Sentiment around that strategy has improved recently, highlighted by Melius Research upgrading Intel shares to buy with a $50 price target, a move that reflects growing confidence that management can execute on its roadmap after years of delays, missteps, and lost market share in both data centers and client PCs. Yet behind the bright CES lights, traders remain cautious, watching closely to see whether Intel can move quickly from polished stage demos to stable high-volume production on 18A without major yield issues, cost overruns, or schedule slips, because any sign of trouble in the ramp-up or in customer adoption could trigger a sharp show-me reaction in the share price and remind investors that this turnaround story is still very much a work in progress.